In today's video, we're going to have a recap of the last 7 months because it has been 7 months since I have last been on YouTube. I am so glad to be back, and without further ado, let's get into today's video. What's the crack, everyone? Welcome back to Buy Wholesale. I hope, of course, you are all well. I have not said that in about 7 months. It feels really good. First off, I don't want to get into where I have been. I did a video yesterday. I'll share the link to that video. Please go in and check it out if you're interested. If you don't care, we're back, and that is all that really matters. Shout out to the family in the Discord. Appreciate you all for all the support through that time again. The format usually is we look back and see what winners and what trades were open. I mean, it's all out the window, guys. A lot has happened in 7 months, as you can appreciate. But what we will do for a little laugh is we'll look back at the previous video just to see what kind of predictions I was saying, how much touched, and where we kind of started off. So as you can see, the unthinkable about to happen, a stock market crash in 2023. As you can tell, I was very bearish, but do not be put off by the bearish titles. It is kind of clickbait for the YouTube algorithm. Coming up on Buy Wholesale, we were talking about Bitcoin. Bitcoin up 2.3% to 23,000. So what I was saying previously was that I felt that there could be more downside due to the market sentiment. Now, I did also say that we were in a bull run. Let's have a look at the 22nd of January and see where we have went. So on the 22nd of January, we did continue that rise, and we went up almost 14%. So that would have definitely been a trade that we would have continued on. Now we fell below the sell, and this is where the kind of market really pulled back. And this is where the trade went right down to that 200-day moving average, but we never fell below that 200-day moving average. So this was still a bull run. This would have been a lovely trade to have been in. Now what you'll find is if we look from that period of time, we are now back in a bear market. So it's kind of ironic that all those videos that I was doing was bearish, the dark times, hard times, all this. The whole time I've been off, we were in a bull market, and now we're bearish again. So I mean, it's unbelievable. I missed the whole fun bull run that there was, and I am back covering dark, gloomy time. We did talk about certain stocks at the time. I'm not that interested in talking about them because there were swing trades at the time. Let's look at the major indices. The S&P 500 then, where is it? Well, we were saying that it was at about a figure of 3,948. What actually happened was the date was the 20th, was the last closing day when I did the video. We had it looked to be falling below the 200. And so let's strip this out. What I was saying was, you can see we have been bearish in a bear market for a long time. So my prediction was, because the probabilities would have said that we would have pulled back. But if we had just been doing the channel for one more week, that whole story would have changed. Because we can see here, we bounced off the 200-day moving average. We pushed up, we went down to test it again, and then we went bull run, guys. Since my last video, we went from a bull market in Bitcoin to a bear market, from a bear market in the S&P to a bull market. And this doesn't look like any signs of stopping. Now, this is what I want to talk about. The SPY is pushing hard. We had a lovely cool off period here, and this is going to push. I would nearly bet my house on it. Down about 6%. People were panicking. We didn't even get close to the 200-day moving average. If we fall below that 200-day moving average, that's the panic stations. That's your sell point. Not yet, guys. This is only pushing. Look at the MACD RSI. Look at that RSI, guys. Look at the MACD. Only crossing over, room for days. And the NASDAQ was the same story. It looked like we were going to get in there. Look how long this bear run lasted for. We broke out. We touched, and then we rallied, and with the exact same indications to me saying that it is not going to end anytime soon. It is phenomenal. Now, I'm going to go for a lot of TA in the next couple of weeks. While this looks good, I do fear, of course I fear a next market crash, and I'm not trying to be that guy that's going to be doom and gloom. I'm going to enjoy this for as long as it lasts. We've been chatting relentlessly in the Discord about all of this. My thought process is to buy. So the last time I was sitting at about 50% cash. Once we went bullish, that whole position size completely changed. My portfolio has completely changed. It's actually unbelievable. At the time, I had about 24 stocks positions. I'm down to 12, consolidating all my money in, and I have been closing out positions that I have decided I no longer want. Now, that is a long video for another day, but what I'm trying to say is use this time to close out positions that you really don't want and consolidate your money into solid companies, because the hard times, in my opinion, are still to come. Unemployment this week went up by 3.8%, which is a good thing for the markets, surprisingly, because it usually means that the Fed then will pull back. Same as the UK and all that. It's the exact same principle. They're increasing rates to stop people spending. They want to keep inflation down. If people are spending, inflation goes up. So what they're trying to do is increase interest rates, which then will drive down economic growth, will drive down people wanting to spend. And as a result of doing that, it will mean unemployment will start to rise, and that's a great indication then that it's starting to take effect. I still think there'll be interest rates to come. At that time, I was saying that there would be a pivot this year. We've had pauses. That's a pause. That's not a pivot. I still fancy a pivot to potentially come this year, but the Fed are being very hard and very resilient. To their credit, we still have many months to go until the end of the year. I still fancy a pivot to come, and usually after a pivot is when the crash kind of happens. I know it seems crazy to take all that in, but we'll get back to covering information and charts very soon. Let's talk about some positivity then in the news. Amazon stock, 423 billion in market cap amidst the longest monthly winning streak since 2011. Now, I'm an Amazon seller. I'm an Amazon believer. I truly believe it's going to be the future. That is why I'm setting up my own business in it. I'm fully understanding the business model because it's got room for days. Virtual intelligence coming into play, AI, robots, warehouse jobs going to get cut down. All of this is only telling me one thing only: Amazon is well prepared for the future in terms of AI and robotics. Now let's have a look at what to expect this week. PMI surveys, the Fed's beige book, and inflation reading from China. Now, this chart has changed quite a lot. We're still seeing a good run in Bitcoin. I still am very bullish on Bitcoin. We've got the Bitcoin ETF, if you've heard news about that this week. But what we're actually looking for is the halving in 2024. I don't personally feel there's any need to be buying Bitcoin right now, especially now that we're in a bear market. I've been waiting for the next bull run to commence over the 200-day moving average before considering buying any. Unfortunately, due to me being off YouTube, I wasn't able to tell you to buy oil, but I bought oil about a month ago, right rock bottom at the price. Again, using the charts to show that. And as you can see, we have went in the bull run and we have seen oil pop up. I don't foresee that, to be honest with you, stopping now. And that's just following the historic trend. Usually at the end of the summer going into the winter, guess what? Oil becomes more high in demand. Who would have ever thought? I know, I'm back and bloody market's closed. Some earnings, some data coming out, but the key things you've got to look at here is on Wednesday, the Federal Reserve will issue its latest beige book and an overview of the US economy, published 8 times a year, that reflects the economic conditions across all 12 reserve districts. The latest issue could describe an economy that remains robust despite headwinds. Consumer spending accounts for more than 2/3 of the US gross GDP and has held up despite the Fed's rate hikes, which unemployment remains near multi-decade lows. And that is, to be fair, even though we have had increases in unemployment, it's still incredibly low. This interest cycle that we're on, that's why I don't think it's going to quite stop yet. I still think everything that we're talking about will play out, but there is some interesting indicators that could suggest that this could be a soft landing. It really, really could be. Personally speaking, I just think it's either going to be a soft landing or it's going to be the worst case scenario. I mean, the worst case scenario. And you're kind of hedging your bets going, where are we going to go? But when you look at that debt calculator, and I'll bring it up. The good old debt calculator. I haven't seen this in a while. You can see here that every USA citizen owes over 250 grand now. It wasn't even that much. It was like 246, I think, at the time. Unbelievable that this is how much people owe. We're now 121%, and it's just continuing to go up. This is like a ticking time bomb as far as I'm concerned. But enough of the doom and gloom, because it's not, we are in a bull run. We've got China's economic data, which is obviously going to be an indication to see how exports and imports are doing. I suppose the main takeaway that's driving the market on is AI. AI has popped. It is unbelievable how much ChatGPT and all the AI movement has came over, especially since I've really been off this last 7 months. It has just, every earnings report, you mention AI, it pops. And one of the AI plays that is done phenomenally well over the period and did a great earnings report is NVIDIA. Shout out to D, who's one of the Discord members who requested us to have a look at at this. As you can see, it just looks like a bit like the NASDAQ. It looks like it's pulled down, it's cooled off, a healthy cool off, and it is pushed on above the 200-day moving average. The actual swing trades, we're all above all the averages. Good run left in the RSI and MACD. If your gut's telling you it should pop, but if you just took away all the emotion, all the news, all the FUD, and just looked at the charts, this is a good buying opportunity. This looks like it could rally on a lot more just with the general market. And if the general market is going to pull on, it's going to be something like Nvidia that's going to pull it, because it is one of the biggest market cap weighted stocks in the whole industry itself. It is really driving the market upwards, and it kind of looks very familiar to when the dot-com bubble happened, and the tech stocks really dragged that market way above. Even when the indications and the yields and stuff would sort of say this is getting a bit crazy, the market just kept going. But I don't want to be doom and gloom, but I have to bring up this as well. A stormy September for US stocks may lie ahead. What investors need to know about the worst month? September is historically the worst stock trading month of the year. And if you want to pause and look at the details, here you go. Please feel free to do so. That is the recap. The markets look strong. I appreciate it was high level, but I feel so good to be back. And because we are back, we've relaunched our training course. £99 if you're interested in learning all of this. But guys, forget about the promo. I'm really happy to be back. Thanks everyone for subscribing and liking these videos. I would love you all to really smash and really comment down below if you're still watching, if you've been waiting for me, if you've missed me, if you hate me, and God almighty, that guy's back again. Just let me know down in the comments below, because I really want to get a good gauge of how much work is going to be involved getting this YouTube channel back up. I've been told that effectively this long period of time out, you're back to square one. So if I'm back doing like 10, 20 views per video, you're going to watch a grown man cry, but I will not give up. Because of the 10 or 15 people that have been behind me, I will do it for you, because I've appreciated you through these hard 7 months. But I'm so glad to be back. As I said, I'll catch you in the next video. I'll see you in the week. Peace.